Welcome to Markets Now. I'm Michelle Rook along with Kevin Dooling with KD Investors. We are lower in the grains except for portions of the wheat complex mixed in the livestock futures. And Kevin, let's once again talk about a big overnight session in the wheat market on Sunday night with more developments in the Black Sea region, but it just doesn't seem like we can really hold on to the big gains there in the overnights.
No, the overnight trade is usually pretty small in volume, and then the opening bell crowd in the morning are heavy sellers. Have been heavy sellers for the last few weeks. I don't know. Is it just funds pressing it because they can? Is it what causes that? I'm not sure because the initial thought over the weekend when a tanker got hit in a Russian bay was that near a port was like, okay, we're starting to get civilian ships attacked, and that's going to run that insurance through the roof if they get insurance at all. And this is the Russian ports, not the Ukrainian ones, and so that factors in an incredible amount of grain. That we're talking another 45 million metric tons that has to come out of there, and it's just an amazing situation. You would think there'd be some major risk premium in there, and when I look at the price, it's below the cost of production. It's inspiring nobody to plant wheat this fall. We've got the fourth year of flat demand, and it's flat because it has to be because we don't have enough production to expand demand. And when that happens, the next year just has a massive demand pull. So we're not going to plant enough acres to achieve that. So it's kind of beyond belief that the sellers come in every morning and push it down. So we're higher today a little bit. It's holding on to small double-digit gains in Chicago. Kansas City's up marginally, and Minneapolis is down a little bit to start the day. We'll see how this closes. Like I say, I expected a strong day after the tanker got hit, as well as the rhetoric saying that all Russian Black Sea ports, all vessels there are now military targets, and it's a war zone. Clearly, it just continues to escalate. And at what point does the market have to care? And I guess we could still get grain out of there. If we start damaging Russian ports, then that changes. Most of Ukraine's Black Sea ports and some of the Danube ports have already sustained major damage, so I can't see them coming back online anytime soon. So it's if we had this same exact news flow last year, in that May timeframe when the market was sensitive, we would have completely exploded and blew out to new all-time highs for a lot. But right now we just get no traction. It's really bizarre, and we're seeing demand come in. We're seeing world demand pick up. All the biggies are picking up wheat right now. The world cash price is rising, and it's just the futures they're kind of a sick dog at the moment, for lack of a better term. So
No, I'm with you on that. And of course, you mentioned the lack of response, and last week down 70 cents to over $1 in the wheat complex with everything that was going on there in terms of the war escalating. So certainly disappointing. And wheat has been kind of holding corn down too, don't you think?
oh yeah, it's made everybody, everything sick. You look at this morning, you got soybeans down in the 45 to 50 with the rains and some really
Sure.
really ideal weather, and yeah, they're taking turns being negative. And corn's a tough one, really tough to gauge this crop. There's going to be some phenomenal corn in a lot of areas. At the same time, you're going to have some big disappointments, and so it's really hard to track this yield. And demand's been lackluster, but a lot of that lackluster demands from old crop has been the lack of supply and high prices, especially out of the PNW. The corn price in the PNW has been $1 over white wheat for most of this last 7 months, which is amazing. And so I wonder when the pipeline starts filling, if we'll see demand trickle back in. I sure hope we do. I don't see why we wouldn't. But at the same time, corn just doesn't have a good demand story to kick it And so it's like you said earlier off camera there, it's stuck between soybeans and wheat and getting pulled two different directions. And so, but wheat was the negative last week, and this week looks like soybeans. So,
Yeah, and that is because we did get some pretty good rains over the weekend in some of the northern parts of the soybean belt, and there's more in the forecast. So how much more weather premium do you think we need to take out of that market?
probably not a lot. We may take out another day or two, not probably as severe as today, just because you got WASDA prep, so you're going to have positioning ahead of the Friday WASDA. And you've got demand showing up every day. China bought a little bit more today. They bought some Friday. They're showing up with their daily tenders, and that's a good indicator that soybeans have value close by. So
we did do some chart damage, though, not only on soybeans but on a lot of the complex last week in the grains, didn't we?
Oh, absolutely. Yeah, the charts look pretty rough. I can make a decent case for wheat. The soybean market needs to hold right here. If it doesn't, that's going to look a little bit ugly. Corn, it's got technically I could see a little more downside, but it should start stabilizing. I'm not as bearish as many. I don't think we're going to see those really no numbers getting thrown around. The Black Sea has the potential to kick corn up another dollar or two. I mean, there's a lot of corn that comes out of Ukraine that's going to be missed this year.
No doubt. And, you mentioned the report coming up on Friday. Is this grain market selling off too much ahead of that report?
It could be, a lot of times, you see big moves ahead of the report. It's usually a fantastic time to take the other side of it. I always get nervous when a market rallies hard into a report because you're usually headed the other way after it. In this case, if we're going to fade going into it, then it's probably a good time to take the long side of everything. I don't know how much how much this report's going to weigh on it. I don't see, major changes coming. It shouldn't be a big mover, but like I say, it causes the trade to step back a little bit and reposition afterwards. So that's when we get a pretty good move typically.
Yeah. All right. Let's talk about this cattle market. We're seeing a little bit more of a mixed trade here today, but we did have some better cash on the Fed side of the equation last week. I know the cash market on the feeders has been pretty hot as well. And then now you get this pullback in corn. So we've had some new contract highs in the feeders, but the question is, how high or how much farther can we push that?
Well, I mean, we set up a nice range there, for about a month or two between that 248 and 252 in the October feeders, and it was a good candidate for a top, and we were watching that close and hoping it would break out of that range. We did last week, and so to me it looks like we're in the middle of another leg higher, and I could easily see another $5-7 in this thing to set up another little plateau up there where we could reapply some hedges again. I like this market. I mean, unless the grains really get stirred up over the Black Sea, I see this continuing a little bit. I don't see any reason to get bearish cattle right here. I think we got a little more room to go.
Yeah, and then do you get some of the corn needs lined up right now if we do get an escalation of the war and, we put premium in, as you say? Is this an opportunity to get some of that feed lined up right now?
It's certainly a time to hedge it. I mean, it's certainly a time it's not necessarily time to buy all of it because I don't know. I'd be surprised if the corn lows are in. I mean,
right.
The Black Sea is the risk, but it's certainly a time to at least have some call options on the corn, at least have maybe a third to 40% of your needs getting booked right now. Certainly better prices than you saw last year. So, yeah, it works. But I'm not ready to go all 2 feet and get all your feed order spot yet.
You are suggesting LRP though as a risk management tool.
Oh, it's a fantastic tool. The brokers can't come close to it with put options. It's subsidized. It's for 4 to 5. 45 cents a pound, you're getting basically a way to capture this market and guarantee that the downside to be closed off. So yeah, it's a great tool. I highly recommend looking at that with your insurance agent.
Yeah, especially with all this volatility that we have. That's a really good point. All right. Thanks for joining us, Kevin. Kevin Dooling with KD Investors. That's Markets Now.